All right. So welcome to Game Plan Sunday. Today is September 5th, 2021. This is the Labor Day weekend. We have a short week in the markets this week, but I'm here with the crew, and we're going to go over what occurred in the market over the past week, what we noticed coming down the pipeline, digesting all this data and information that we have coming out here so that we can make some informative decisions in the market. But I'd like to start this session off with a quote from Professor Ludwig von Mises and his magnus opus, Human Action. This book right here is really phenomenal. But anyway, just a little quote in here for my guys and ladies. It says, entrepreneurs and capitalists expose their own material well-being if they are fully convinced of the soundness of their plans. They will never venture to take their economic life into their hands because an expert advised them to do so. Those ignorant people who operate on the stock and commodity exchange according to tips are destined to lose their money from whatever source they may have got their inspiration and inside information. Thought it was a pretty interesting, this chapter. He's talking about forecasting as a profession, where he starts to dissect the fallacies of the statisticians and things like that. Which I think is pretty interesting because we're starting to go through a lot of it in real time right now. We got a lot of data that we're assessing. But Professor Mises, he talks about, data being historical events, things that happened in the past, so they can't possibly predict what's coming in the future because the future is no indication of what occurred in the past. We can learn from things that happened in the past, but ultimately the basis of economics in the Austrian School of Economics is human action. So because humans are acting, humans could act rationally, humans could act irrationally. Nobody knows, So, but that's basically that's a really good chapter in that book. So I just want to share that with you guys. But we'll talk about certain events that happen in the market here. We'll just go down the review events here. So let's see, the first headline we got here is Delta data in doubts. More than 75% of the S&P 500 reported better earnings in the second quarter of 2021 than in 2019. So it looks like, second quarter was actually, pretty good for the markets here so far. The S&P and NASDAQ composite set new highs. Despite a Delta variant surge, U.S. manufacturing accelerated in August while Asia slowed. Jobless claims fell to a pandemic low, but the jobs number skidded to a mere 235,000, dealing a blow to a September taper. So we'll go through those numbers there because those job numbers that we got were pretty interesting. And then stocks then faded on the week. The Dow slipped, and the S&P rose, the NASDAQ gained. All right, so we had leaving Afghanistan. U.S. drone strikes killed 2 terrorist leaders thought to be behind the Kabul airport bombing, and the last U.S. troops withdrew from Afghanistan, ending the 20-year war. The final number of people airlifted out of Kabul, some 123,000. So we talked about this last week about the whole situation. But this week, the wreckage of Ida. Okay, so the Gulf Coast was inundated by Hurricane Ida 16 years to the day after Katrina hit it, bringing storm surge, rain, and hurricane force winds. But while power went out across the region, Entergy said 2,000 miles of lines were knocked down and 1 million people were left in the heat and dark. The $15 billion investment in pumps and levees in New Orleans held. Ida then moved north, killing at least 45, mostly in flash floods. So to share a sad story with you guys know that I am a gamer. I love playing video games, been playing video games, forever. There's a couple that I know, been playing the video game with this older couple. They're like in their 60s, but they've, been playing with them since probably 2009-ish, 2010-ish time frame. Back when my kids were like little, real small. But I was playing with them for a long time. And just the other day, I was playing really late one night, and one of the guys, he had hit me up from the couple, the husband, he had hit me up. He was telling me that his wife passed in this hurricane situation. They moved down from PA down to Tennessee, and I think 21, actually their story was in the New York Times, which is so sad because I never met them, but I've known them for so many years. They treat me like family. They don't hear from me. They call me up like, hey, where you at? What's going on? You okay? Real good people, man. So my condolences to to them. He lost his wife in that flood in Tennessee, out of all places. He just never even think about it. Lost the whole house, lost everything. He got swept in by the currents. They pulled him too, but he grabbed on the fence and was able to pull himself up. But unfortunately, his wife, she wasn't able to make it, so she's no longer here. But he's here and he's lost everything. So it's pretty dramatic, when people, real people, caught up in this stuff. So, so a lot of, people that are at a loss, huge loss with this Hurricane Ida situation. I just didn't really realize it was so bad. So anyway, definitely keep those people in our prayers so they can, get back to a speedy recovery and, give them a heart to be able to cope with the losses. It's pretty tough. All right. All right. Blame the games. China banned children from playing video games on school nights and for no more than an hour a day on Fridays, weekends, and holidays. A blow to gaming companies like NetEase and Tencent. The government called gaming a form of youth addiction. Separately, China President Xi Jinping announced a new Beijing tech exchange, while technology giants rushed to fund his Common Prosperity Initiative. They always got to make stuff sound so good, Common Prosperity Initiative. I mean, everybody's going to have prosperity. There's always utopia, pie in the sky, socialist dreams. But it was interesting. I was like, hey, does Xi Jinping take a page out of my book? You know what I'm saying? Like, I have my kids, like, no video games to the weekdays, only on the weekend. Even myself, like, I play the video game on the weekends. I don't play on the weekday. I got too much work to do. So, but anyway, I just think that's interesting that they are banning their kids from playing video games. Now, this is going to be real interesting because China, they're trying to get their citizenship to be as productive as possible. So, I mean, this probably will increase their productivity. Maybe it won't. I don't know, because it's a little hard, especially when they're already playing video games. The kids are pretty hooked, so it's going to be pretty hard. And actually, there was another headline that came out as well with China is supposed to be banning what they call sissy boys on their television shows and stuff like that. So any feminine men on TV, they're getting canceled. They only want brolic men on TV in China now, Reese said good. Right. So they only want, brolic men, on TV. For y'all who didn't see the movie Candyman, it opens up, in a way that would displease Xi Jinping in China. Okay. For y'all that saw that movie Candyman, it was weird opening. But anyhow, all these, these things are pretty interesting that they're making all these changes to their people. And you see the total opposite in America, actually, which is interesting. So you guys know that I'm all about liberty, freedom. So, it's a little tough, idea, but I don't believe in the principles of force. You feel me? So no forcing, allow people to do what they do. You know what I'm saying? So that's what I believe in. But at the same time, you can see that, this could be problematic if you continue to promote it, in that kind of way. It's nothing about like, okay, let people do what they do. But it's like when you're beating it down people's throats, it's like, what is going on with this agenda? So I just think that's interesting. But that's what just, popped out in China. Holmes on trial. 7 men and 5 women will sit on the jury in the trial of Theranos founder Elizabeth Holmes. Federal prosecutors have charged Holmes with 12 counts of fraud and wire fraud and making false claims for the company blood testing technology. Theranos, which once had a $9 billion valuation, collapsed in 2018 after the Wall Street Journal reported on problems with the technology. All right. So nothing much more important here in these headlines. I know in the week, starting the week off in the markets this week, on a high note with PayPal exploring a stock trading platform. So they're supposed to be doing like what Robinhood and everybody else is supposed to be doing, which had to eat Robinhood's lunch. PayPal, they already have a huge fan base. You already got the app. Easy, you can go in and buy you some stocks. But that's the problem with when you have, companies that's changing, trying to revolutionize, industries, and they, do things that they say is free. They're doing it at minimum cost, so they may take a loss on certain aspects until they can get rid of competition before they can start charging. Kind of like Amazon, they're able to take losses for all those earlier years, and then they're able to gain so much market share they can come back and then they can start charging for it. But it starts to work against these companies too, especially when you're talking about free, because, and especially with technology, because anybody can come in and anybody can leverage the same technology. This is one of the reasons why Warren Buffett doesn't like to invest in technology companies because it's like coding. It's nothing unique about it. Anybody can code. And so the race becomes, let's get the best coders, the best hackers. That's what all companies is looking for right now. So you can try to recreate it. So anyway, you have PayPal that's, that's jumping in the mix there. Excuse me. All right. And so the biggest headline this week was the job numbers here. See if I can pull them up real quick. I know we had like a lot of data to pull up. Oh, there we go. Thanks for Terry right there. August non-farm payroll increased 235,000 versus 720,000 estimate. So all the wise guys, they were forecasting 720,000. The print was 235,000. So this is the actual print right here. I can just go to read more. Total non-farm payroll employment rose by 235,000 in August, and the unemployment rate declined by 0.2%. U.S. Bureau of Labor Statistics reported today, so far this year, monthly job growth has averaged 586,000. In August, notable job gains occurred in the professional and business services, transportation and warehousing, private education, manufacturing, and other services. Employment and retail trade declined over the month. This news release presents statistics from 2 monthly surveys. Okay, you don't need to know all that. So anyway, this is a huge miss in the employment numbers. So this begs the question about stagflation now. Okay, so stagflation, that's what we've been talking about, stagflation, hyperinflation, all these different inflations. But basically, I was telling you guys before with the stagflation, the problem is the government, nothing they do can elevate the economy. The economy just sinks. The more money they throw at it, there's no growth. It becomes stagflating. It's no growth. And this can easily turn into a depression. This can easily turn into hyperinflation. It really just depends on all the participants, okay? And the reaction. So the whole thing, you got to remember the markets is a whole confidence game. It's all about confidence. It's a belief system. So once, participants believe in a certain thing, then we'll start to see the changes take place because their actions will take the place of their belief, So right now you have the Powell put in place. Everybody's believing what Powell says as the truth. And so because people are, moving on that's why you see the stock market continue to pile on up. Stock market is at extreme highs right now. We're, well due for a pullback, much needed pullback. I'm sure some of you guys would appreciate a pullback right now because it continues to just melt up. So we're seeing a melt up right now. But a lot of the movement is in the tech stocks, okay? And so we have a lot of different, analogous situations that remind us of what we're seeing in the markets right now. All over the headlines right now, you got a lot of people talking about the 1970s, with the killer inflation. Also, you got the 2000 .com bubble with all the tech stocks, all the speculations in the market, blew up a tech stock bubble, which I think that's what we're seeing right now as well. So many people have this belief in technology, and we're seeing a lot of money that's going through that technology is going to get really, really volatile. Like I was just showing you guys with PayPal and about to jump into the game with Robinhood and compete. It's a lot of competition. It can only be a few winners at the end, So that means somebody's going to have to lose. Some people going to lose. That's just the way it's going to be. So, I found all of that interesting there. All right, let me start here. The end of bizarre CDC rent moratorium. This is an article by Peter Schiff that's on the website. You guys can check it out. But notice coming into this month of September, there's a lot of things that's ending. A lot of things that's been supporting this economy that's, supposed to be ending. When I say supposed to be ending. So we got the moratoriums that's supposed to be ending this month. Okay. We got unemployment benefits. These unemployment benefits are supposed to be ending as well, which is interesting because they've been thinking that these jobs would be, more people would be taking these jobs once the unemployment would start to drop off. But instead, we're seeing the jobs continue to fall. We can see right here in the ADP numbers, you guys can see this chart right here, okay? Let's see right here. You can see, let me just read that real quick so you guys can see it. Says the labor market recovery continues to exhibit uneven progress, but progress nonetheless. July payroll data reports a marked slowdown from the second quarter pace in jobs growth, said Nilla Richardson, chief economist of ADP. For the fifth straight month, the leisure and hospitality sector is the fastest growing industry. Leisure and hospitality. Thus, gains have softened. The slowdown in the recovery has also impacted companies of all sizes. Bottlenecks in hiring continues to hold back stronger gains, particularly in light of new COVID, or I should say Rona, because you know how they be editing us and things like that. Rona concerns tied to viral variants. These barriers should ebb in coming months with stronger monthly gains ahead as a result. I don't know where they're seeing strong monthly gains ahead. Even if you just let me just put this in real quick. Okay, so even if you look at the previous year, or I guess we don't have the previous years in here. We just got this one, but you can see normally in the winter season, man, things slow down. That's just a seasonal thing. You feel me? Seasonal thing. Okay, so quite naturally, my expectation is that things are going to continue to get worse. Okay. But it's not just my expectations. We had the consumer confidence expectations as well. And I'll go over those with you guys here in a second as well, to show you what the expectations are. But, again, we have to see what's going to print, which is going to be after the fact. But forecasting, that's the risk that we take because we're forecasting. Hope that we're right. In some cases, we hope that we're not right. But taking a look at these things here, I just don't see it getting better. So, again, they always constantly try to perform this inception situation where they try to get into the minds and the hearts of people that things are good, things are going to be great, things are going to get better, to keep people, optimistic about the economy. Once people get pessimistic, people start to take the capital and leave. You get a capital flight. They don't want that. So they got to, they got to keep their little lives going, but you got to be able to see through all of that. All right. So speaking on that, let's go to the PMI manufacturing numbers that we got this week. And we're going to take a look at the respondents. Okay. So this is what the respondents are saying on the manufacturing side. Then from here, we'll take a look at the servicing side as well. All right. So they said business levels continue to exhibit strong demand with no signs of backing down. So people are shopping, right? Purchases continue to have long lead times due to shortages of raw material and labor force, as well as logistic challenges. Increased costs are being passed to consumers. Now, so this, I said consumers, I should have said customers. All right, so since the beginning of this year, I've been telling you guys that's what was gonna happen, but the whole time they were saying, oh, that wasn't gonna happen. Now we're seeing it in the prints, we're seeing it in the headlines that the cost is being passed to customers, right? So this is all inflationary, continuous track of inflation that we're seeing here. And again, this is a leading indicator. So this is what's going to be coming down the pipeline here in the next few months. These guys are at the forefront of it. So everything that happens here, you're going to see it bleed out in the next couple of months. So we're looking ahead with this information here. So they tell this is in the computer electronics product section. Okay. Now taking a look over in the chemical products, he says supply chains are slowly, very slowly filling up like a water hose, starting upstream and slowly flowing downstream. Rumor is a full return to normal, maybe nearer to year's end, but the situation is progressing. So they're pretty optimistic, these people here. They said transportation, equipment, and drivers is the current pinch point, more so than material shortages. So they acknowledge that they got some material shortages, but what they're saying is more pressing is the shortage of equipment and drivers, okay? So they don't have enough people for that. Let's see, strong sales continue and inventories are low as the chip shortage is keeping production numbers down. We have idled several of our assembly plants to reduce the strain on the chip supply base. So again, we saw all those moves in the market with NVIDIA, with AMD. Again, you got these chip shortages here. Okay, so you have an over demand, not enough supply to meet that demand. People still buying video games. Also, my video games, computers. People want to mine Bitcoin. You need the computer chips. Well, they don't have enough. Okay, so what they're saying is they're idling down their goals and everything, right? Because they can't meet it. They can't meet demand. Still dealing with price increases from force majeure issues, as well as overseas shipping premiums and higher costs of items like fuel. Customer demand still high, pushing plant to max production rates. So their plants are max production rates, but they said they're dealing with price increases. Okay, so from the overseas shipping premiums, higher costs like fuel, these things they had to pass on to the customers. Strong operations with new program orders and launches continue to have hiring difficulties and are unable to fill production and salary jobs due to a lack of candidates. So they don't even have enough people that's even applying for the jobs, or maybe not qualified for the jobs. Raw materials are still in short supply with longer lead times. So that's a double fold situation. They don't have enough people to meet demand, and they don't have enough raw materials to actually meet demand as well. So again, we're seeing a shortage of everything, the everything shortage. Income bookings continue to be strong and economy continues to return, still struggling with inflation and availability of materials, labor, and freight. Again, this is consistent throughout all of these surveys. Sales are above last year, above by a good percentage, but meeting demand is just not possible. All right. They're telling you there. Supply chain having to place orders months ahead of time just to get a place in line. All right. I told you guys this about a month ago. I'm still waiting for things that I ordered 6 months now, still don't have it. All right. Call the people up and they're like, well, there were people that's waiting for the same thing that you ordering from last year. I'm like, you mean to tell me y'all haven't been able to get these parts since last year? Why do y'all even have it on the website so that I can even buy that? Can y'all just take it down? You feel me? Like this is how ridiculous it is right now. Y'all don't understand. Business levels continue to be very strong, but we also continue to struggle finding employees. We can only fill 75% of our order requirements due to the labor shortage. This is in the primary metals market. All right. So the print came out at 59.5, well above 50%. It said it is growing, but at a slower rate, still growing. So that's what the PMI manufacturing numbers were. Again, these are leading indicators. You're getting a taste of what's going to come down the pipeline in the near future. All right. And let's take a look. Let me go back up to the servicing. Excuse me. I'll go back up to the servicing numbers so you can actually analyze those as well. All right. Y'all know we're in the servicing economy. Okay. Most of the stuff that we actually use, we're importing, but we, have a lot of jobs that people are servicing. So this is that information. All right. So on the servicing side, Jonathan says they don't want to use that handgun. That's right. That's right. What the Fed's going to do, they're not going to use the handgun. So we already know what the end game is going to be. They got to kill the dollar. All right. Supply chain disruptions, including manufacturing, labor shortages, logistics delays, and lack of material to make products. They don't even have it. There's a shortage of available workers, which is challenging our business operations. Material and labor shortages. Price increases are ever present and repetitive. Multiple price increases. I'm just going over the gold parts. Here, supply chain constraints. You guys can see it. I'm going to skip this one. I'm going to go to the next one. Supplies are tight in technology and hardware. So again, supply shortage. Temporary labor continues to be in short supply. All right, so maybe they have seasonality in their business, in their industry. They hire people in certain seasons, most likely temporary workers. They don't have them. Short in supply. Continuing supply chain disruptions and supply cost increase. All right, chemicals and transportation services are in short supply. Also, chip shortages. We just saw that as well. All right. Limited supply of critical items. Staffing shortages causing us to find alternative sources or adjust schedules. So they're trying to, figure it out. Still shortages continue. Labor constraints at suppliers continue to push delivery dates out. Logistics issues as container space, truck drivers, and the like remain difficult to obtain. So y'all tell me, what do y'all gather from what we're reading in the PMI servicing numbers and the manufacturing numbers? Are you getting a sense that inflation is transitory, or are you getting a sense that this is actually going to be permanent? Y'all tell me, drop that in the comments. I'm going to actually read this next one here, but y'all let me know how y'all feel in the comments over there. All right, and I'll go over that. But right here, they said inpatient and outpatient services and ancillary services volumes continue to be very high, driven by increased admissions and increased lengths of stay. Pharmaceutical volume is high as well, which relates to patient volume in our cancer center. Okay, so it's the cancer center. They're saying, things are crazy. They got super high volumes of people that's in there. Surgical case volumes remain strong, as do associated physician services. Okay, so they're getting a lot of people that's there for not even the Rona. Okay, all these cases, you see all the news, everybody blaming unvaccinated people. These cases, people are already filling up the hospitals for all kind of stuff. All right, this is what they're telling you right here. They said that emergency room visits exceeded budgeted levels by 14.2%. This volume resulted in an increase in diagnostic services, specifically CT scans. In addition, so this is in addition, this comes after all of that. So it looks like the medical hospital systems are already, bombarded with all of that. But in addition, we are seeing an increase in the Rona patients again. So that was in addition. It wasn't a causality, right? But you don't get that when you see the news for their agendas. But we have a lot of other health issues and all kind of issues across this country that are that's not even being paid attention to. Like suicide rates are at astronomical high levels, never seen before, and nobody's talking about that. So it's a lot of things that they're not talking about because they have an agenda. It's not about health. It's all about an agenda. All right. So anyway, so what did y'all get from the ISM numbers, the PMI numbers? Did y'all gather that this is transitory, as the Fed said? Do y'all feel like inflation is transitory, or do you think that is permanent? Y'all let me know. All right. I've been covering this entire year, telling you guys, and everything we've been saying has been coming true. So you got it right there. All right. This number here is the Federal Reserve Bank. This is the important data that they normally put out called a nowcast when they're forecasting the GDP. What's interesting, I noticed that they suspended it. Boom, suspension notification for this data right here. So they suspended it. It says the uncertainty around the pandemic and the consequent volatility in the data have posed a number of challenges to the nowcast model. Therefore, we have decided to suspend the publication of the nowcast while we continue to work on methodological improvements to better address these challenges. All right, listen, and I posted it in my little feed here because I think that some people just think that numbers is God, and it's not. They're not. Numbers don't make anything real. They don't. You got to understand, numbers don't make anything real. I told you guys this before about Einstein. Einstein was a math wizard. Okay, after he built those atomic bombs for the government, he was tossed and thrown away. He wanted to go through black holes and all kind of stuff. Man, nobody wanted nothing to do with this dude. He went down this whole math, crazy stuff. Nobody cared about him. The young whippersnappers, they was taking his science and they was, continuing with, military stuff. And that's what the people want. That's what the government wanted. They didn't want Einstein with all his math wizardry. Again, we have a lot of statisticians' fallacies. And a lot of these numbers, the CPI numbers, you see some people call them the CPI numbers, right? They say, oh, we don't see inflation. Well, have you been to the grocery store lately? Well, have you seen the price of houses lately? Have you seen the price of rents lately? What do you mean there's no inflation? Inflation is out of this world, okay? So just remember, numbers, we put too much faith in numbers. And as an analyst, I can tell you guys, yeah, we just put way too much faith in these numbers. Just understand they're not God and they're not impeccable. So there's a bunch of variables that's constantly changing and stuff like that. Even when we build financial models, we got to constantly change them because the behaviors of the subjects are constantly changing, especially dealing with people. People, they change. We're changing constantly. So we have to change things. So models, they may work for a little while, but we have to constantly improve on those things, constantly, trying to get as much information we can and then trying to predict the future, which nobody can do. We try our best to, but I just wanted to show that. Check this out. 400,000 homeowners enter final month of forbearance. We were just talking about these houses, home prices being crazy. Okay. We're seeing record high home prices right now. And I'm seeing a lot of people being priced out of the market and just giving up. They don't want to buy a house no more because it's too expensive. Why? Well, you have a lot of these corporations that's buying houses now, and you can't compete with them. So you got Zillow. If you go Zillow, you can actually see some of the listings where they tell you that the property is owned by Zillow. All right. So I have a lot of happy people that I know that sold to Zillow. Let's say Zillow paid us well over the bid. So with the regular people, trying to take advantage of home ownership, They're not able to. They're getting priced out of the market because of corporations. Now, FHFA claimed that they're claiming that they're supposed to have some kind of 20 to 30 day period where these institutions cannot, compete on these homes. But then after that, they can, which is supposed to give investors the time to be able to go in and bid and try to secure your deal. But if this is public information, right, don't you think that the sellers will wait out 30 damn days to get an extra 100,000 overbid? You see what I'm saying? Like, this is the problem. Yeah, the government, people think the government can solve everything. The government actually causes a lot of these problems and it can't solve them. That's a better alternative. It's the free markets, the market-based economy. But you got to get the government out of the way. You understand? So the government, they are in the way. They're pumping up all of this stuff, okay? And it is really negligence because you start to see the house of cards start to come down, all right? But it said Black Knight estimates that nearly 630,000 forbearance plans, more than 1/3 of those currently active, are slated for review this month. Of those, 400,000 will have reached the end of their 18 months of forbearance eligibility unless the maximum term is extended again. Do y'all think they're going to extend it again? Let me know. Let me know in the comments. Let me know if you think they're going to extend it again. There's no right or wrong answer. We just asking you think they will extend it or you think they won't extend it. So the end of August saw a significant decline in forbearance numbers as services worked through the month's crop of the 3 months review. Plans declined by 53,000 over the week ended August 31st with more than 23,000 from FHA or VA portfolios. The number of GSC, which is Fannie Mae and Freddie Mac loans, dropped by 20,000 in loan service for bank portfolios. Private label securities saw a 10,000 unit decline. The number of plans is down by 9% since the end of July. All right. Black Knight estimates that approximately, okay, here we go, 1.71 million borrowers remain in forbearance. Okay, 3.2% of the 53 million outstanding mortgages. How many outstanding mortgages? 53. Okay, so that's 3.2% of those. Those loans have an unpaid balance of $331 billion. All right. So again, I mean, they're showing here that, the forbearance there is declining. You guys can see that right there. But if you know what's coming down the pipeline, I'm telling you, this is not going to be good. Feds is holding up this whole thing. They're buying $120 billion a month in securities, and inflation is out of this world. They have to do something. What are they going to do? Okay. Are they going to, taper? So that's what all these economists are fighting about right now. Hey, they need to taper, right? They're about to cook the economy. Okay. So, but remember, I'll tell you this month right here is going to be critical because a lot of programs are supposed to be ending. All right. It's supposed to be ending. Johnson said they will extend. They don't want to advertise it. Exactly. They're going to extend it. They don't have no other choice. It's their policy. They have this, this policy of just 2% employment rate that they're going for, and another thing called price stability. Now, prices are out of control right now. So which one are they going to do? Because they're trying to run two different objectives: price stability on one end and low unemployment on the other end. So, but they're failing at both of them, actually. So their intervention. Remember, I told you guys last week about FDR situation in the 1930s, the Great Depression. Coming into the Depression, his answers were to tax the rich, to do all those things that y'all see Joe Biden trying to do right now. And guess what? They didn't work. For 8 years, they did not work. FDR needed a war. He found a way to get us into World War II, provoking Japan unnecessarily, got us in that war. And then after that, in his third term, that's when things started to turn around. He served 4 terms, actually, so, which is crazy. But anyway, that's all I was telling y'all. Joe Biden, he's going to need a war too. Right? Because it's not going to work. And you got to think, the feds, what are they doing? That we're already at 0% interest rates, right? The rates are, look, this is what they control. This line right here, the gray line, all right? This is where it's at. You feel me? 0, right? All of this is 0. You can't push it down no more. That's how, remember, we predicted this whole recession thing to come because they did not have enough interest rate. Traditionally, they need to have at least 5% to be able to cut, to be able to save the economy. They didn't have it, right? Just did not have it. Just don't have it. Will not have it. So something has to give. All right. Reese said they're about to have a war. That's why they're legislating to have women in the draft. Oh, Lord, they don't need to do that. Yeah. But yeah, I mean, again, it wouldn't amaze me because we see in the government, moving very tyrannical right now, trampling over all kind of human rights. I mean, we're moving in the same steps as the Soviet Union, did back in the day, and the Nazis, the Germans, which we need to turn away from those things because those are not the principles that, got America to where it's at. We were the envy of the world. Everybody talk about the West, all the freedoms that we have over here, but those things are getting trampled in the name of so-called science. I mean, it's so ridiculous. These technocrats are out of their mind because science is not one mind, it's not one person. You have alternatives, all kind of different sciences, but there's no debates anymore. It's like, oh, you have to go with whatever the government says, or we're going to shut you up on Facebook, shut you up on YouTube, shut you up on all kind of places. So then you have the end of truth because people no longer get the truth anymore, which the truth is starting to come out. It's leaking, but you got to pay attention to it. People are just closed-minded. You have to be open to the truth. If you're not, and nothing nobody can do to save you. All right. Consumer confidence fell in August to lowest level since February. This is what I was telling you guys earlier about this confidence gain. Remember, the market, the stock market, everything is all confidence. Once that confidence leaves, you're going to have a whole lot more problems. All right. Remember I was telling you guys about how hyperinflation works, right? It's all about this confidence thing. And once people lose their confidence, it's out the door. So they have to put out these news narratives that inflation is transitory. They don't want to scare people, right? Because once that mindset sets in, and my man Al, Dustin, Jonathan, Reese, Serge, Terry, everybody start to go to Walmart or wherever the case may be, start to buy all the things that you need in advance. And everybody looking at you, your family members looking at you like, why are you going stocking up on all that stuff? They scared. They're going to go start stocking up too. So then you get this whole thing that they call velocity. So velocity starts to turn over the money much faster. And that's how you go into hyperinflation. So they don't want people to be scared because that's what happens. So they got to make you feel comfortable so you don't go out there and start buying up everything in advance. All right. So the confidence board, consumer confidence index declined in August. So this was a decline. Following a decrease in July, a downward revision, so they revised the numbers in July. The index now stands at 113.8, down from 125.1% in July. So it was higher in July. It's dropped, a good amount there. The present situation index based on consumers' assessment of current business and labor market conditions fell to 147.3 from 157.2. So present situation index, it fell. The expectations index based on the consumer short-term outlook for income, business, and labor market conditions fell to 91.4% from 103.8. So that also fell. And let's see what the director says. Consumer confidence retreated in August to its lowest level since February 2021. So this is the lowest level it's been since February. Concerns about the Delta variant. So people are concerned about the Rona. And to a lesser degree, rising gas and food prices. So you see how they had to downplay it? It says, and to a lesser degree, rising gas and food prices. Listen, rising gas and food prices, you're going to have to deal with that forever. You may have to deal with the Rona forever. We deal with the common cold. We deal with pneumonia. We deal with the flu forever. And I've been telling people this anyway, because upper respiratory viruses, you can't eradicate them. They're going to be here forever. So I think we definitely overreacted. We're still overreacting. They let the genie out the bottle, which they shouldn't have, with that experiment down in the Chinese lab, whoever's responsible for it. I'm not going to get into that. But it's one of those things that rising gas and food prices, this is really going to have, I think it's going to have a bigger impact on us than the Rona. I think Rona is more psychological. Although there's people that's dying, we're not saying people are not dying, blah, blah, blah. But when you look at the charts, you can barely see the death rates anywhere on those charts. It's so small. You're talking about less than 1% of people that's freaking dying. And then you have to break it down that data to see who's actually dying. It's people that's over 70 years old. All right. Don't let the news headlines scare you. They show some young person died. Now you think that all young people are dying. That's not what the data is showing. All right. And I showed you guys the charts. I haven't even updated the joint. Yeah, here you go. Right here. Don't take my word for it. Don't take nobody's word for it. You go look it up yourself. All right. Let's see what this. I guess this thing is loading. But anyway, you'll barely see it in comparison to the cases numbers are high, but the death rates are really low. But rising gas and food prices, man, those things are hard to actually come down. And rent, like I was talking about rent, talking about mortgage rates are super high. We're talking about wages also. Employers, once they start to pay you a certain wage, they don't take that back. So all of this is permanent. You feel me? So, but the narrative is that it's transitory. All right. But it says this resulted in a less favorable view of current economic conditions and short-term growth prospects. Spending intentions for homes, autos, and major appliances all cool somewhat. All right. So they said people spending money on autos, major appliances, they all cooled off. So people not spending money there. However, the percentage of consumers intending to take a vacation in the next 6 months continued to climb. Anybody go on vacation in the past 6 months? I did. Yes. I've been vacationing ever since this whole thing kicked off. Nothing about my life has changed. So, but I understand a lot of people are scared to travel and stuff like that. But that's not what I'm saying. I'm seeing a lot of people traveling. I've been seeing this all year. People are traveling. People are so scared they would not be traveling. You know, you go outside, you see somebody's skin just fall off, or their skin bubbling, like how in the biblical days they had freaking leprosy and stuff like that. Like, you know, you don't need a government to lock you down on something like that. You're like, I'm going to keep myself locked down in the house. I don't want that. But because this Rona situation looks just like the common cold, pneumonia, the flu, people are not that afraid of it. So they got to put stories out there to get people, keep people in this state of fear. They got this new, you got the Delta variant, you got the Lambda variant, and now came out this week. The new headline is the Moo. That's what they got now. The Omega joint is out now. This new variant, and what they're saying is that, you know, those people who took the vaccines are not even. They don't have immunity against these things. So now they're trying to, you know, push this booster shot to try to give you immunity against this thing, because if you got the vaccine, it's not going to work, you know, towards these new variants. So you're going to need to get some extra boost to your immunity. But it's all interesting because it keeps people in fear. So, yeah, Turks and Caicos, LA, Vegas, St. Lucia. Nice. Live life. All right, so while the resurgence of Rona and inflation concerns have dampened confidence, it is too soon to conclude this decline will result in consumers significantly curtailing their spending in the months ahead. So they're saying they don't know if people are going to stop spending. I done told you guys, you know, my hypothesis is that, again, you know, kids going back to school. What's the next biggest holidays that we have coming up? People are saving for these next holidays coming up. That's what typically happens. You get a slowdown. You got, you know, the summertime, everybody's in the streets, everybody's, you know, traveling. School season comes back, not as much traveling. So you start to see things go down anyway, just from seasonalities. But that's interesting. But we got other, you know, distortions in this whole system, though, that we have to, you know, pay attention to as well. That's why it's hard to, we can't clock it. You know what I'm saying? There's no price stability. There's nothing. Everything is chaos right now in the markets. So anyway, here's an article here that was in the Barron's. It said a weak jobs report put Fed in a bind as it stares at stagflation. For a market with a one-track mind, Friday's massive non-farm payrolls miss is ostensibly good news. On its face, it means the Fed's tapering of emergency bond buys is all but certain to be delayed, and investors can count on easy money for longer. But a closer look at the August jobs report reveals an alarming picture and a deepening policy predicament. All right, so this is what we're just talking about. You know, bad news is good news for the market. So that's why you see in the stock market hit record highs. We just got record highs last week. And the economy is weak because the stock market is detached from the economy. You got to understand that. Like, this is not the same thing. So that's why we cover the economics. So we got to understand how everything is working. Then we also cover the markets as well, so we can get and make some money. But it's important that you have the wherewithal to understand what's going on. You feel me? Policymakers and economists are loath to use the word stagflation. Oh, they don't want to use that word. They don't want to scare you. It's the same way they don't want to use the word depressions. So they always say recessions, like the GCF 2008. That was a depression. But they don't call it that, right? Because it's taboo. So you don't want to call it depression because people can start to get depressed. Call it a recession because they can handle that. It conjures up images associated with the 1970s sky-high prices All right. Do we not see sky high prices right now? Hell yes. Everything is sky high. Flailing economic growth, high unemployment. Don't we see all of that? Yes. It's the same thing. And a weak stock market. Well, stock market on this end is not weak though. So stock market is super strong because they pump this thing full of liquidity. All right. So what if prices keep rising? The growth really is stalling. All right. Let's go here. One way to read the August unemployment report is that it reflects the worst of both worlds. That is to say, while the relatively dismal non-farm payroll increase of 235,000, 500,000 short of Wall Street's estimate, seems to give the Fed breathing room when it comes to reducing its $120 billion in monthly Treasury and mortgage-backed securities purchases. That dovish take is complicated by the report's details. All right. Again, you guys can read this. This is right here. I'm just going to the conclusion. Let's say the bottom line, investors need to square the impact of stagflationary forces and high stock valuations. Something has to give, it seems, and it is probably not going to be the Fed. Of course, they're not going to give up the Fed. They're not going to give it the government, which that's the problem. They're going to have them to print more money because that is the only medicine. You're going to have to fix this, right? We have all these people that's not working. So what they failed, again, we have all these miscalculations. People are anticipating that, you know, they're going to force people back into the labor market. What they don't understand is that the people, they're thinking in the past. They got to think in the future. Those people are not coming back. Okay, there's a lot of baby boomers that said, the hell with this shit. Bro, I'm about to go live the good life, you feel me? And I'll hang it up, you know. They tired. I'm tired, boss. Retired. Retired. That's what they're doing. They're retiring. So they're not coming back. All right. Then you have women, a lot of women that's out of the labor market as well. They have kids, no accommodations. But then I think that another pressing issue is these mandates also that is not on nobody's radar. I haven't seen nobody talking about it. But if you think about it, there are people that are adamantly against this whole taking the vaccine stuff, right? But now, you know, the government has their loopholes to get their agendas pushed across through corporations to facilitate the will of the government. The government gives candies, you know, they give all these good rewards to have, you know, this fascist regime. So companies are trying to mandate these things because it is a human right violation in the name of safety. So again, principles of liberty, you're not, you know, familiar with it. It's a lot of good stuff. Here's a book right here called Against Leviathan. Check this one out. This is a good one. Robert Higgs. All right. I have so many of these books, man. I'll be checking them out. All kind of stuff. But anyway, you learn principles of liberty, then you understand, you know, the arguments that's going forward. How you have to have liberty over all. You can't have, you know, this so-called safety by the government because they always get it wrong. Everything the government did, it was wrong. Okay. The whole lockdowns, the whole mask, everything was just wrong. Okay. They caused destruction. And now we're trying to climb out of this thing. So, but just understand, like, I don't see anybody that's talking about, you know, that situation. And so I think that can actually blindside people, you know, so just keep that in mind before I go on a tangent on that. All right. Let's take a look at what's coming down the pipeline, and then we'll take a look at these charts. All right. So Monday, tomorrow, okay, the markets are going to be closed. You guys can see that. Bingo. Tuesday, we got Casey's General Store and Cooper Software announced earnings. Nobody cares about those. But Wednesday, people are going to care about these. You got GameStop and Lululemon. They're going to be releasing their quarterly results. Let's see. Analog Digital hosts a conference. Global Payments, Johnson Controls International, ResMed hold conference or investor days. All right. Economic data. We're going to have the Bureau of Labor Statistics release the job openings and labor turnover survey. We have a consensus numbers that's in there as well. Y'all don't care about that. The Federal Reserve reports consumer credit data for July. So we get the Federal Reserve reports consumer credit data about credit here. Total outstanding consumer debt increased by $37.7 billion to a record $4.32 trillion in June. All right, this is consumer debt. People are in debt, okay? And that's why I said this is really, really bad. So we'll get some insight on that. The Federal Reserve released a beige book for the 6th of 8 times this year. The report summarizes current economic conditions among the 12 Federal Reserve districts. Okay, so Powell, he's not the only one. Got all the other guys. We hear from all of them. in that report on Wednesday. So Wednesday is going to be a more eventful day. Thursday, we got Home Depot. They host their conference. Okay, Moderna hosts its 5th annual Research and Development Day. Let's see, Danaher. Okay, international papers. I'm just scrolling through this here. The ECB announces its monetary policy decision. For you currency traders out there, you definitely want to keep your eyes on this. The ECB is expected to keep its key interest rate unchanged at minus 0.5. So they got negative rates over in Europe, and they anticipate for that to stay the same. The Department of Labor reports initial jobless claims for the week ending on September 4th. In August, claims averaged 355,000 a week, the lowest since the pandemic's onset. This will also be the last week that the extra $300 from federal enhanced unemployment benefits is available. They are set to expire by September 6th. Well, guess what? That's on the holiday, Labor Day. So after that, the extra $300 is going to be cut off. So people are not going to be balling out of control anymore. Probably not going on vacation every week now, you know what I'm saying? They're going to lose that extra money that they've been getting, and then maybe they'll go back and get a job. We'll see how that plays out, because you got to understand, in the market economy, man, and employers, they figure things out. I told you guys how ants figure it out. If you disrupt their path, they go crazy bananas for a second, but then they'll figure it back out and they continue their work. Well, the natural economy does the same thing. We end up figuring things out. So you will have a lot of these companies are also trying to figure out automation, okay, and outsourcing these jobs overseas, okay? People in America don't want to work. Cool, let's go get these robots. Cool, let's go hire these people out in India. Pay them, chump change. Let's hire some people down in Mexico. We got the internet, we got 5G, we got internet, so we can have these people to do all this stuff. Americans don't want to work. All right, Americans right now want to live in utopia, don't want to be productive, don't want to make nothing, right? And you see China, they already got their kids. Listen, turn that video game off. You got 3 hours a week, you're going to be productive. And they forcing them, which again, I'm not with the whole force thing. There's a better way. Wife, she always says, baby, you can draw more bees with honey. All right, just remember that, all right? Anyway. So Friday, we get the BLS reports, the PPI numbers, and that's looking to be strong as well. So those are the events that we got coming up this week. Last week, let's see, take a look at this data here. All right, so we had Bitcoin that came up 2.38% last week. So Bitcoin above 50,000 again for all these crypto lovers. Bitcoin above 50,000. So good rally for the Bitcoiners. The NASDAQ at 1.55% led the way. Remember, we talked about tech continues to lead the way. We're seeing that to continue to be the case. People, still buying tech. The RUT is at 0.65%. Oil at 0.63%. S&P 500, 0.58%. Gold at 0.52%. Gold is actually a little interesting. The Dow slipped 0.24%. And the dollar down 0.61%. All right. And then as far as the sectors go, we have real estate had a nice pop, 4.06% in real estate. Healthcare, 1.65%. Consumer staples at 1.46%. Utilities at 1.42%. Consumer discretionary, 0.92%. And communications at 0.89%. Tech at 0.86%, industrial slip 0.31%, materials 0.67%, energy 1.40%, and financials negative 2.38%. All right, so that's a lot of profit taking that's happening in the financials there. All right, good. And all right, so with that being said, let's get to these charts. All right, so we got the S&P 500 that's here above us. All right, we still got my tracker here. I might need to update that, but I wanted to keep this here as a reminder that JP Morgan target is at the 4,400. They obviously have hit their target, so they obviously have sold at some point because they hit their targets on their analysis. But here we go again. Market melts up to these highs. Okay, and pay attention to how that 50 moving average works. Boom, 50. Look at that. 50, boom, it works like clockwork, see, boom. You get that drop, that's when they start to buy back. So from this drop here, boom, we're right up there, right on schedule. All right. So we're due for another pullback. As you guys can see, we get these pullbacks. All right. So I think that we're due for another pullback. I don't know if it's going to come this week or not, but you guys can see that we're overbought. We can still stay extended in this area a little longer, but we will have some type of return to the mean here pretty soon. So I don't know if it's going to be this month or October, but I am anticipating a pullback to come here right now because this thing is economic data is weak. The market, it doesn't really have much left to stand on. Only thing it's standing on right now is the Fed. All right, so that's the ES. Let's take a look at the NASDAQ. Same thing. Oh Lord, I need to clean these charts up, don't I? All right. All right, so let me get some levels in here. Gonna go and pull out the 2.618. All right. So that's the next hard level, but we're already extended. So I think that we're gonna get some pullback here sometime soon. But this is the next hard level up here around 16,500. All right. The Russell. The Russell's been trading sideways this whole time. So, this is, definitely been the iron condor candidate of the year. You just drop iron condors on this thing and just, make some non-stressful money here, because it's just going sideways. We see we got some down arrows is here. It's the stochastic starting to roll over here. It hit that 786, starting to roll over here. Again, this has been the weakest performer. So we're seeing that to continue. Take a look at the dollar. All right, so we got the dollar here, after it hit this high at that extension from here, it started to correct. And it's down here at the 100 moving average. So it's going to be important to see if it solidifies and start to chop right here at this level, or do we continue to fall back down? Okay, so weak dollar, good for the markets. Strong dollar, bad for the markets. All right. On the other end of that, as the dollar goes down, we're seeing gold come back up. Excuse me. All right, so we're seeing gold come back up. All right, so gold has came from this floor down here. These floors ripped through, snapped back in, came back up right here to the 200 moving average. Now we are getting above that, and see prices leaping above the 200 moving average. This is getting ready to be the next floor again. All right. So I think that we'll start to see gold strengthening as the market comes to the realization that the Feds don't have the power to taper. Okay. And again, that's my whole thing, is that the Feds, they will taper once they are forced to, because I don't think they actually can, because it'll be, they'll cause the whole bubble of all bubbles to collapse if they were to raise interest rates. So they're definitely not going to raise interest rates. They're going to probably try to do a sneaky, pull back on some of the asset purchases. Instead of 120 billion, probably go down to like 115, 100, or whatever the case may be. I try to ease their way off, but they're definitely not going to raise the rates. They will be forced to. But I think that we're starting to see, gold come back. So interesting. I mean, there's some pretty nice gold stocks like KL, Kirkland. This is a pretty good one. Had a nice little pop right there, up at that 786, starting to get above its moving averages again. Again, we're looking for these moving averages to become the floor. Start to see things solidify. Also, you got like gold, still in a downtrend, but again, a little counter trend pop off that's happening in there. Where you get a little buy trigger in there, so we can see it come up to these moving averages again, see if it gets smacked down and it comes back to the 100. All right, and then you got the 200 that's pretty close to it as well. Once it clears those things, then you'd be good. So I just need to clear those resistance zones. So I think that's going to be good. Now that the markets, so we had Jackson Hole, and now I think the markets are starting to digest the whole situation. Although you still got some Fed, president guys coming out, they thinking that they're going to taper around November, but I don't think they're going to be able to do it this whole year. I think that things are going to get so bad, they're going to have to go back. They probably end up starting to try to cut again. Okay, print more, right? They're going to have to put these programs back on. That's what I think. All right. So with that being said, let's take a look at some of these names here. All right. Yes, sir. We got in the scanner here, we got Shopify, Jonathan. Yeah, so Shopify is actually looking pretty good. We got the squeeze that's right here. We got the trend that's looking upwards here. It is chopping sideways up in this 786, almost looking like a bull flag there though, with the squeeze on top of it. So again, I am bullish that. And we got a target right there around 1650. Then we're gonna go and make another run on that on Shopify. What else we got? Let's take a look at Home Depot. All right. So at Home Depot, we just talked about the hurricane situation, Hurricane Ida, tearing up, things across the land. They're going to have to rebuild. Who's going to benefit from the rebuilding? I mean, if you look at this as a cup and handles situation here, cup and handle situation, trend is up, squeeze is on. All right. So again, I can see this going north because again, Home Depot, they got their, let's see. Yeah. In fact, I think they got a situation this week where they talk to the investors. So that probably brings some good news as well. But then they're going to benefit from rebuilding of Ida and any other hurricanes that's going to be coming. We have more hurricanes coming this season. So I think that was going to be a good one. All right. Let's see. Walmart might be interesting. It's going into a squeeze right now. Okay. Let's see. All right, that's the this 618 right here is a key resistance level, so definitely need to clear that. But it's looking like it's in that squeeze. So I want to keep my eye on it. You see this, the castings go down and it's starting to rip back up. And we got buy triggers on this as well. However, key thing is we need to clear the 618 at 150, and we're right there. So we can clear that. I think Walmart will be good. All right. Oh yeah, Dustin, man, Baba was, running crazy this week. Let's take a look at that real quick. Baba's an interesting thing. We've been talking about it in the chat room for those that's in the chat room on a daily basis. We've been talking about Baba because, when you take a look at it, right? $320 stock now trading at a discount, $170. I mean, that is a good low price. So when we had, dropped this Fibonacci from this zone in here, we got these extensions here acting as floor levels. Okay. All right. So we can see it traded up and back here as the rip too low, traded back into the mean, come back down, hit this again. And now it's passed and it's trying to get to the 21, but it's like it's getting rejected again. So we may see the thing continue to roll over some more. So again, this is a real tricky one because, the Chinese government, they're cracking down on everything over there. We just talked about the kids, video games, sissy boys, Jack Ma, whoever. China is not playing no games. But there could be more pain for these companies to go through. Let's go to the weekly here. So on the weekly here, this 1618, I think is a strong floor as well. So this right here, again, I think if we come down, you can see come down here, boom, rejected, chopping down, all ripped all the way down here, but didn't quite hit that level. Starting to chop back up, it might come back into this level right here and continue to go, further south. I think that'll probably be a more ideal point, but we'll see. All right, this could be the reversal, but yeah, again, China is no telling what's happening with the government. So still risky, but that price is attractive. You got to understand, 320, you can get that. You get that thing for half off, so that actually looks pretty good. All right. All right, Jonathan, let's pull out your Moderna. All right, let's go on the daily here. So Moderna here. Some day trading levels. All right. All right, so then Moderna's actually looking like a double bottom setup right here. Boom. Boom. I mean, it could definitely come up just like that. We can see the momentum went down, shifting upwards. Stochastic showing us the same thing. Buy triggers in there as well. So, I mean, again, that could be a good one. You can't believe you bought it at 27 and sold at 80. Take profits often. Take profits often. Good work. Good work. All right. Yeah, but I can see that squeeze. I can see that set up for you, Jonathan, as well. And then you also had LRCX. All right, this one's more a little choppy here. I imagine that you're looking more bullish on this one. I'm looking more sideways. But again, you know, biotech companies, not my mojo. So we'll see. It's got a bullish. If we just take a look at the technical, it's got a buy trigger that's in here right there. But it's compressing. You guys can see it's compressing. It's trading this channel here sideways here. So it hasn't broken out of that. And then we got all these moving averages just right above, and price is kind of stuck there. So you're going to need to see, you know, price and break out. But even if the price break out, I think it's, you know, go right in that range there. So not too sure what you're looking at, but you may want to look at some butterflies, iron condors. All right. And oh, Dustin got PayPal. Okay, still on PayPal, which you just talked about them. Okay. And you can see PayPal in here. All right, let me just remove this to clean this up a little bit. All right, so we saw PayPal come down to the 100, scrape the floor, get a buy trigger in there, come up, boom, rejected at the 618. This is a key resistance level here. However, it's still intact. This could be forming a little bear flag. So the key thing on this one is going to be, you know, see how, you know, works or with the 618. All right. So I think it'll go probably sideways. Typically you'll see it start to build up, you know, sideways before another takeoff. So maybe some spreads on that one, Dustin. Yeah. What else we got? And you say still like AMD. Okay. Okay. Yeah, looking at a very similar situation on AMD as well. You know, that key resistance level, you know, came down, boom, look up, getting rejected right now. It is in a squeeze right now, but I would like to see if it holds that, holds its mean, or is it going to come down to the 50 moving average? So that's going to be an interesting one. So if you got a position, maybe you got a spread, you'd be better off dealing with time decay. If you got a call, you might be going through some pain, especially if you bought up here and it's going down. Overall, it's bullish, but again, we starting to see things starting to tick downward a little bit. So, you know, it's going down a little bit. All right, so yeah, again, I'd like to see it solidify right here at this floor and start to uptick. If you see that, then yeah, long is going to be the way to go. If not, cancel the idea. All right, and let's see, not messing with the PRC. So Johnson said he's not messing with China. Okay, and Dustin says keeping a look on the large caps. Okay, TCHY had a daily trend change. Baba. Okay, all the big boys can't believe. Okay, semiconductors, land research. All right, looks like we pretty much got everybody. Ain't nobody saying nothing about Square. Let me see what I got. Square right here. So Square, another one. Guys, check that one out. Got a little buy trigger right there, but again, we want to see the conditions on this one improve. Seeing it come here, look like it could be rolling over, so I want to see it continue to go up though. All right. All right. So it looks like we got everybody taken care of. Dustin, Jonathan, Research, Terry. All right. With that being said, man, we'll go ahead and bring this session to a close. Happy holidays to everybody. Remember, the market is closed tomorrow. I'll be in the chat room from time to time. So if anybody need any assistance, got any questions, I'll be in the chat throughout the day. But yeah, definitely want to thank you guys for joining us here, and y'all have a great weekend. Peace.